Are you retire ready? This is the IssuesWatch podcast. Hi, I'm Don Meyer, Chief Marketing Officer at the New Jersey Society of CPAs, and welcome to the IssuesWatch podcast. On July 10th, New Jersey announced the launch of RetireReady NJ, a state-administered retirement savings program for private sector workers. RetireReady NJ aims to fill the void for workers who do not have access to private employee retirement plans. But like most well-intentioned state programs, the devil is in the details, especially for CPAs who represent or work for the thousands of employers who will need to register for the program or face penalties. Here with me to discuss Retire Ready is Chris Fundora, Director of Retirement Planning at Traphagen CPAs and Wealth Advisors. Welcome, Chris.
Thanks, Don. It's great to be here.
Great. All right, so let's jump right in. Where did Retire Ready originate from, and what is the objective of the program?
Sure. So Governor Murphy signed the New Jersey Secure Choice Act in March of 2019 to essentially create this program. And so now we're at the point where we went through an initial phase of essentially a beta test, and now it's live. So as of June 30th of 2024, the program is now live, and they've been sending out notices to companies throughout the state to essentially kind of accomplish their objective, which is that they want to help private sector employees to start or to build upon their retirement savings. So in essence, I think we all know to some degree that we have a retirement issue in our country. And that's part of the reason why personally I'm going to the Capitol next week to talk with legislators about the state of retirement in our country. And kind of some background to why this program exists and the conversations around it is that essentially the government is trying two methods to try, this is my perspective, they're trying two methods to solve this retirement issue that we have. And so on one end, you have these state-sponsored, and some people have called for a federally sponsored IRA program. And on the other end, you have all of the tax credits and incentives that came out of Secure and Secure 2.0 to try really encourage employers to start a plan, to make contributions for their employees in the context of Secure, and to really help kind of, again, solve this challenge that we have in the country.
I know that I'm part of Gen X, and I see stories all the time on Google News about the dire state of Gen X retirement accounts. And so I think this has gotten a lot of publicity. I know there's a lot of statistics out there about the number of people who have below average or no retirement savings. And of course, you hear all the time about, will Social Security be solvent in 10, 15, 20 years? So I think the state's heart is in the right place, but of course, there's an impact on the companies that are going to have to implement this program. So how will this program impact New Jersey companies?
Sure. So, and I agree with you, wholeheartedly. I think that we're trying to find a solution. There are different methods that are being utilized. And so I think that the intent is good. But ultimately, some of the way that it's getting positioned is that it's sort of a hands-off approach for employers. And I don't see that being the case. With most things of being a business owner, very few things are hands-off. So when it comes to sort of how it's impacting companies in New Jersey, basically what the rule states is that if you have 25 or more employees in working for you in the past calendar year, then you need to register for this program. There are two registration dates. So if you have 40 or more employees in the prior year, then you need to register by 9/15 of 2024, which is fast approaching. If you have 25 to 39 employees, then you need to register by November 15th of this year, which is not far away either. And so with that, part of what we need to know to communicate this and plan for this well is part of what is the definition of an employee. So I think a lot of the times we default to what a qualified plan calls an employee, right? Somebody who works for you for 1,000 hours a year, they're 21 years of age. But in this program, that is not the case. So a qualifying employee is someone who is 18 years of age, regardless of how many hours they work for you. So if you had at no time last year 25 or more, so if you had less than 25 at any time last year, then you don't have to participate. But if you had 25 or more throughout last year, and you've been in business for 2+ years, whether you are for profit or non-for-profit, you are mandated to participate in this plan. And again, it's age 18, regardless of hours. So that's the context. Those letters have been going out. And part of it is that the letter is basically stating that by the state's records, you need to either register or certify that you are exempt. But the onus is not on the state to prove that. The onus is on the business owner to either register or certify that they are exempt. So the state's very clear that they're saying, essentially, you need to look at your prior year numbers and you need to determine, and then you need to let us know one way or another. So in our view, that's going to lead to questions to CPA practitioners in the country and really in our state. A certain amount of states have adopted it, but in our state, to answer those questions.
Yeah, and you said a little bit earlier that the state looks at this as kind of a hands-off program for businesses, but I guess that probably applies if you have retained a CPA or a CPA firm, because chances are you're probably going to pick up the phone and say, hey, what is this? What do I need to do? And chances are you're going to ask your CPA to do it. So how does this program impact New Jersey CPAs?
I want to talk about some elements too that the business owner has to coordinate with payroll on. We can go into that, but in terms of CPAs, right? We have some of the best CPAs in the country, right? And one of the societies that leads the country in terms of practice and guidance and counsel, right? Between New Jersey BATE and how we adopted QBI planning and so on and so forth. But basically, accountants need to be prepared to provide the guidance in this arena. So one is going to be whether that individual needs to register or not, because there are penalties involved if they don't adhere to the rules or if they don't follow the plan appropriately, if they make some issues. And then the other thing is that we have to provide that guidance and counsel in terms of whether they should be utilizing the state-sponsored IRA program or if they should be operating their own 401k plan. And that's a big item. I think as an aside to that, as CPAs in the state, we always give retirement guidance to some degree, right? Clients are asking what deferral should they make. I think by and large, for a long time, that recommendation was to utilize SEP IRAs and things like that for self-employed. But as an aside, just in the context of guidance, we probably need to move on from providing that guidance of a SEP IRA. So the SEP IRA is no longer a valuable tool. It's actually obsolete in our view. And in any circumstance, there is a better option than a SEP IRA, as you don't get a tax deduction in New Jersey and so on and so forth. So it's really going to come on the CPA to give that guidance of, do you need to register or are you exempt and need to certify that? Or really, should you be utilizing this program or operating a 401k using those credits that are being provided?
And you mentioned a few minutes ago, you mentioned payroll considerations for some of the companies. Do you want to talk about that?
Sure. So what I mentioned earlier, the state is trying to make it as seamless as possible for business owners. But naturally, there are roles and responsibilities that they need to fulfill. And so when it comes to that, like an employer needs to register their employees on this platform, right, that has been set up. They need to mark when someone's been terminated. They need to add somebody onto the platform when they hire a new hire within 90 days of that hire date. And then also what they need to do is they need to make sure that the payroll works. So what basically the structure is intending to look like is that you register your employees, right, or your clients register their employees if they don't have a qualifying plan and they have to, subscribe to this. And then the state will contact them, or the group that the state has hired will contact that employee, talk to them about their options. And if they don't make any sort of election within 30 to 60 days, then they're going to default into a 3% automatic contribution. So that information goes to the business owner, right, or the administrator, if you will. And the company then needs to coordinate with payroll, right, to take that information of what the employee is contributing, run it through payroll, and then make sure that the funds are actually going from that corporate bank account into that IRA that's being established. And if that doesn't happen, I don't think the state is trying to, look for opportunities to penalize people or by any means, but I think we have to know what that is. So if there's a payroll issue and employees are making a deferral or a contribution, it's probably a better term, contribution, and it doesn't actually get in from the corporate bank account to the platform for whatever reason, there's a $2,500 first time offense.
Wow.
Second and subsequent offenses are 5,000. And the business owner or, that company, they can file a protest, right? Essentially like an abatement. But nonetheless, I mean, it's pretty severe. So it's not to say, I just want it to be clear that this is not the set it and forget it option. It is something that there's a utility to it, but we have to be there to make sure that they know what makes the most sense.
Now, we were talking about the company and the CPA perspective. From the employee perspective, is it similar to a 401k in the sense that if you leave a job, you can transfer that money to a new plan? Or does it always kind of stay in there? The employer might change, but it kind of stays in this state-based plan.
Yeah, so you can switch employers and you can stay in the state-based plan. It's the responsibility of the new employer to basically re-register you to make your contributions through payroll.
Got
So there's some operational logistics there, but from a participant perspective, yeah, you can keep your balance there. Or if you decide that you want to roll it into like a Roth IRA, or if you are contributing, the default is that participants are going to contribute on a Roth basis. But if you elect to go on a pre-tax basis, then that participant, it still goes in as after tax. They're going to have to report it on their personal tax return that they contributed to get the deduction, basically. But they do have flexibility to move it. There's different investment options associated with it. So there's flexibility there. And from a participant perspective, the other thing to keep in mind is that it still follows the IRS guidelines in the sense that unlike a 401k plan, when I have a 401k plan, I can contribute to that plan. And then I could also do a Roth IRA or a backdoor Roth IRA, depending on income.
Right.
But in this structure, it's with the IRS limits. So you can't operate in this plan and then go ahead and do a retirement, an IRA, in addition to this. So it's one traditional IRA, it's one Roth IRA, whether you're doing it through your employer or personally.
What would you recommend CPAs? What kind of conversations do you think they should be having with their clients?
I think that CPAs want to be ahead of the curve on this to show that we know that this legislation has already been passed in 2019, has now gone into effect, can basically impact you in terms of you needing to make an election or a certification, and to kind of act accordingly and give those deadlines, right? I think providing that guidance in advance in whatever method a CPA firm is communicating with their clients, right? Maybe it's a special alert or something to that degree, but probably providing that guidance in advance. There is some grace that the state's providing. They know that this is new, but ultimately that election has to be done. And the onus is, like I said, on the employer to either register or certify that they're exempt. So it's an opportunity to just continue that value add of here's what you need to do. Here are the pathways for you to take. and probably also just having a comfortability with understanding 401k plans and how they operate, meaning that when you have a 401k plan, there are certain ways that you can structure that, like as part of a group or an organization, that significantly reduces the liability that an employer has. So as we know, right, when I run a retirement plan standalone by myself, the plan sponsor is assuming a lot of the fiduciary liability for running the plan. And in the retirement space, there's no corporate veil, right? It is personal liability.
Mm-hmm.
But there are, because of Secure 2.0, there are avenues that can be utilized that actually shifts a vast majority of that liability away from the plan sponsor or the owner and automates a lot of those responsibilities and tasks and things like that. So knowing what's available to our clients is also important so we could provide that guidance.
Okay. I do find it interesting that it took, you said the legislation was passed in 2019, so it took 5 years to bring about this program, and they're giving companies a couple of months to get it set up.
Yeah, it's, I think it's like the old saying that Congress makes the decisions and then the CPAs figure out how to implement it.
Right.
So, I think it's how things usually go. They've been doing sort of webinars and things to try to provide guidance. They have a Q&A, they have a separate website that they provided. They've done due diligence to select a platform to use and things like that. So, and they're very forthright. So on the website, you could see their meeting minutes and things like that, which I appreciate how that's been set up. But there hasn't been a lot of discussion around it because I think there's been so many other things that have been going on. And especially we have an election year this year, that we just want to make sure that doesn't slip through the cracks. And then all of a sudden clients are calling and saying, I had no idea about this program. I'm 6 months late on certifying or enrolling. And now I have to hurry up and get ready to actually run this thing. So
I did go to the website, and I found, I think it was about a 4-page FAQ doc, which I guess is good and bad. It's good that they have all that information out there, but I guess it's also a little intimidating that it requires 4 pages to explain the program. But I guess more information is better than less, right?
yeah, and it's gonna continue that way because think about it, if you have union or non-union employees, if you have seasonal employees, if you have, right, it depends on the dynamic of the business. Right? We have so many different types of enterprise here in New Jersey that it's going to come down to basically a one-on-one decision between that business and their CPA.
Right.
And that's just going to be how that decision is made and how those things happen in reality. And I think some ways that's a good thing because there's a reason why CPAs are the most trusted professionals. And it's because you provide that guidance and counsel and all those good things. But it does mean that we're not going into the end of the year quietly. So there's going to be some work coming on everybody's plate, very, very shortly.
Right. Well, we've covered a lot of ground, but I want to make sure that we covered all the ground. So is there anything I did not ask you about that you want to just kind of add in before we close?
I think that it's really understanding, right, that it's 25 or more employees for a full year in the prior year, that the responsibility is on the business owner to certify or to enroll, and that business has to be in effect for 2 years, whether it's for profit or non-for-profit, and that there are options out there. So it's not just an automatic press the button and say yes, but to really look at what's available and take it as an opportunity for us to continue to provide that value add that we've done forever, basically, for clients and lead the other states, right, that are out there. This is a conversation that's happening in almost every single state and definitely on a federal level. There is federal conversation in Congress about actually having a federal-based IRA program. And people have different opinions on that, but I think we want to make sure that our clients are positioned in the best way and also positioned in a way to provide value to their employees. right? So if it makes sense for them to have a 401k plan to provide a match, there is no match requirement in the IRA program. There's no employer contribution requirement. So if that's a way for them to differentiate themselves in their market, to bring in employees and talent and things like that, that again, those go into the value add conversations that we provide each year.
Right. Yeah, good points. You'll have to let us know how it goes down in Washington, D.C. But in the meantime, thanks for joining us today.
Thanks for having me. It was a pleasure.
Thanks for listening or watching. For more information about RetireReady NJ, visit retireready.nj.gov. For retirement planning articles, resources, and events, visit njcpa.org/hub/financial planning.